Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sunlight Real Estate Investment Trust Annual Report. Sunlight Real Estate Investment Trust, REIT, offers investors a diversified portfolio of properties in Hong Kong. The trust's portfolio consists of 11 office and 6 retail properties, totaling approximately 1.3 million sq.ft of gross rentable area. These properties are strategically located across various areas, including core business districts, decentralized business areas, regional transportation hubs, new towns, and urban areas with high population density. The REIT's portfolio includes a mix of office and retail spaces that cater to different types of businesses and customers. The office properties provide space for companies operating in various sectors, while the retail properties offer shopping and entertainment options for residents and visitors. By investing in Sunlight REIT, investors can gain exposure to the Hong Kong property market and potentially benefit from rental income generated by these properties. Sunlight REIT is managed by Henderson Sunlight Asset Management Limited, a subsidiary of Henderson Land Development Company Limited. The manager's primary responsibility is to oversee the trust's assets and ensure that they are managed in accordance with the trust deed, which prioritizes the interests of unit holders. With its experienced management team and diversified portfolio, Sunlight REIT provides investors with a reliable option for investing in Hong Kong's real estate market. Sunlight REIT stock price has experienced a significant increase of over 39.42% in the past year, driven by several key news events and market developments. One major contributor was the positive outlook for Hong Kong's office market in Q3 2025, with reports indicating a rebound in leasing demand from IPO and wealth management-related tenants. The successful refinancing of borrowings in 2025 also played a crucial role, resulting in a 16.1% saving in interest expense and demonstrating strong support from bankers and the REIT's solid financial fundamentals. Furthermore, Sunlight REIT announced a strong final distribution of HK 9.1 cents per unit for the year ended December 31, 2025, bringing the total distribution per unit to HK 18.2 cents and an attractive yield of 7.7%. Additionally, the attainment of a 5-star GRESB rating in 2025 highlights Sunlight REIT's commitment to sustainability, enhancing its appeal to environmentally conscious investors and contributing to overall positive market perception. These factors have likely bolstered investor confidence and driven the increase in Sunlight REIT stock price. Sunlight Real Estate Investment Trust maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Sunlight Real Estate Investment Trust trades at an unknown price-to-earnings ratio of 29 times and a lower price-to-book ratio of 0.35 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 29% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 7%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key financial metrics. On the decline side, rental income and car park income have been negatively impacted, with declines of $363,030 and $19,042 respectively. In contrast, certain property types have experienced significant revenue growth. Office properties saw an increase in rental income by 9.2%, while retail properties witnessed a substantial rise of 49.6% in rental income. Additionally, car park income for retail properties increased by 77.7%. Other factors also contributed to the revenue trend. The decrease in provision for credit losses on rental receivables led to an increase in revenue, whereas the increase in trade and other receivables resulted in a decline in revenue. The financial performance of a company has undergone significant changes between the years ended 2024 and 2025. A notable decline in net income was observed, with a decrease of $102,430 from a profit of $239,605 to a loss of $275,445. This substantial drop in profitability is attributed to various factors. One key factor contributing to this decline is the change in profit margins. The company's profit margin decreased from -1.4% in 2024 to -3.6% in 2025. This indicates that the company has become less profitable over time, with a greater proportion of revenue being allocated towards costs and expenses. The decrease in appraised value and net asset value also had an impact on the company's financial performance, page 3. These changes likely affected the company's ability to generate profits, contributing to the decline in net income. Overall, these factors have resulted in a significant deterioration in the company's financial health between the 2 years. The company's financial performance indicates a significant reduction in interest expenses and debt levels over the past year. Interest expenses have seen a notable decrease, with a drop of 27.1% from $7,672,000 to $5,596,000. This decline is also reflected in total finance costs, which have decreased by 45% from $326,827 to $179,931. These reductions suggest that the company has successfully managed its financial obligations and minimized its interest expenses. In terms of debt levels, while there are mixed signals, the overall trend indicates a decrease. The total debt has reduced by 20.3% from $1,498,123 million in 2024 to $1,199,244 million in 2025. However, non-current liabilities have increased by $133,154, which may indicate some offsetting factors at play. Nonetheless, the overall decrease in debt levels suggests that the company is working towards a more stable financial position. The company has a history of paying dividends to its shareholders. As per the provided summary, the company has declared and paid dividends for both FY 2023/24 and FY 2025. The dividend payments were made in 3 installments: first interim, second interim, and final, with varying amounts. For instance, in FY 2023/24, the first interim payment was 9 cents, followed by 9.1 cents for the second interim and 9.3 cents for the final payment. Similarly, for FY 2025, the company has declared an interim dividend of 9.1 cents, with a final payment also set at 9.1 cents. It is worth noting that there is no information available on share buybacks by the company. This suggests that the company's primary focus has been on distributing profits to its shareholders through dividends rather than repurchasing shares. That concludes the financial summary for Sunlight Real Estate Investment Trust. Feel free to comment below, and I will be happy to answer them when possible.